Good morning, friends. Welcome to SBI Securities morning podcast. In today's podcast, we will be discussing what to expect in Nifty and Bank Nifty from here on, along with the key levels for both the indices. We will also be discussing on key sectors and stocks that we should be focusing for the day and the next few trading sessions. In trade in the week gone by, Nifty gained 0.85% over the course of the week, while Bank Nifty lost about 0.93%. Largely, this was the rally in Nifty was largely due to the strong moves which was seen in the IT sector, along with Reliance Industries adding to the momentum. Coming to the macro factors, the US dollar index is currently trading at 102.5 levels, while the US 10-year yields are quoting around 4%, signaling a probable delay in interest rate cuts by the Fed. Brent crude remains steady between $80 to $75 a barrel. Below $75, crude prices could weaken to $70-71 a barrel, which would be a positive factor from a macroeconomic standpoint. Coming to a quick check on the global markets, the S&P 500 is near its previous swing high, beyond which it could spike to its life highs. Looking ahead till the 20-day EMA holds, the index can continue its positive momentum towards the levels of 4,840, 4,890 levels. While on the downside, 4680, 4700 zone would act as an important support level. Coming to Nifty, on the back of support from the IT as well as Reliance Industries, index easily cruised to 21,900 zone with the 5% build up of open interest on the long side. Going forward, support is likely seen at the 13-day EMA of 21,660, 21,700 levels, and till the time 21,660 holds, the index can continue its positive momentum towards the levels of 22,300, 22,400 zone on the upside. In case 21,650 is breached, the index can slide towards 21,450, 21,370 zone on the downside. Coming to the OI data for this week's expiry, Nifty PCR is currently stronger, but it is approaching the overbought zone of 1.43 with aggressive put writing seen in 21,700 and 21,800 strikes, while the 21,900 and 22,300 calls also saw aggressive writing. The overall range for the week could be 21,700 on the downside and 22,300 on the upside. Coming to Bank Nifty, the medium term trend for Bank Nifty is bullish. However, we expect the index to consolidate with a positive bias ahead of HDFC Bank, ICICI Bank, IndusInd and Kotak in the coming week. Going forward, the zone of 47,300, 47,400 is likely to act as a support, while on the upside resistance is seen at 48,000, 48,100 mark. Above the levels of 48,100, Bank Nifty could witness sharp short covering towards the levels of 48,500, 48,600. While in case 47,400 breaks, the index can retest its next support placed at 47,050, 46,800. From next week's expiry point of view, that is this week Wednesday, the significant open interest build-up is witnessed in 47,800, 47,900 calls, and on the put side it is mainly seen in 47,500, implying a range of 47,350 and 48,100 for the coming few sessions. Coming to stocks and sectors in momentum post excellent quarterly numbers, IT pack is leading the current round of the upswing as it catches up with the broader market, with the likes of Infosys, TCS, HCL Tech, Tech Mahindra, LTIM displaying strong buying momentum with a rise in open interest built up on the long side. Pharma counters continue to do well. The likes of Abbott, Sun Pharma and Torrent Pharma are experiencing buying with heavy volumes. Bullish setup was also observed in mid-cap PSU and private banks, the likes of Bank of India, Bank of Maharashtra, Union Bank, Karnataka Bank, IndusInd Bank, Dhanlaxmi Bank, all witnessed positive traction in the week gone by. From the broader market, bullish setup was observed in large cap IT, large cap counters such as L&T, Grasim, Bharti Airtel, Hero MotoCorp, Reliance, Tata Motors, while mid caps such as Tata Consumers, Trent, Godrej Properties, Hind Petro and Dixon also experienced good traction on the upside. Even non-FNO counters such as IRFC, RVNL, BEML, Amber, Zomato, IRDA witnessed bullish traction and are positive from a medium term perspective. Coming to the FII/DI data, in the cash segment on Friday, FIIs sold to the tune of 340 crores while DIs bought to the tune of 2,911 crores. From a weekly perspective, FIIs sold to the tune of 3,900 crores while DIs bought to the tune of 6,860 crores. Need to keep track of the FIIs in the cash segment as they have started to be sellers in the rising market. Even FI's long short ratio slightly weakened to 63.35% on Friday in comparison to 66.83% during the last week. On a net basis, FIs sold 17,303 index future contracts during the week, with buying bets in Nifty futures and selling bets seen in Bank Nifty futures. On the stock futures front, FIs sold to the tune of 5,639 contracts through the week. This is because on last Monday, that is, FIs sold big in stock futures, but gradually they added long positions through the week. So friends, that's all for today. Thank you for regularly listening to our podcast and wishing you all an energetic day ahead. Do tune in tomorrow for more market updates and insights. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.